Well, even though we've seen this gradual and incremental progress being put on by the NSE over recent weeks, it's taken the market now to a new all-time closing high for 2010. What's your view on where we're headed from here on out?
I believe the market is actually going through what many analysts have been believing, a very strong moment. And when you're looking at the different listed companies of the stock market, all of them have very good fundamentals. The budget that we just read a couple of days ago was very instrumental. It's very strong in terms of wealth creation. In as much as the Ministry of Finance has tried to balance out everything, I think many companies at the market are waiting to see how the budget will go. And I think in terms of support, in terms of policy, and also the stimulus package, that the implementation of the second phase in terms of supporting the key areas that are actually key to the growth of the economy, actually it's being implemented. And I think the market is going, we're looking at a bullish phase right now. And I'll concur with what Ali Khanna said. Basically, we're looking at good times ahead, and we've seen renewed interest by foreign investors coming in, and especially because of favorable interest rates. However, in as much as we'd like to be bullish and everything, we need to understand that the country at the moment is going through a political turmoil in terms of coming up with a new constitution. And at the end of the day, this is the only dark cloud that's hanging over the full growth of our markets. And in as much as we've seen, like the market, closing a high in 2010, I think the only drawback will be how businesses are going to handle the issue of the new constitution coming up, and how the politicians are going to inspire business will or not.
Well, just looking at a few companies that stood in the spotlight yesterday, Safaricom picking up off the bottom of its trading range. To what extent are you viewing this share price movement as a belated reaction to their full year numbers that were released quite a while ago, but that didn't see much reaction despite the positivity that surrounded it?
One thing that many investors need to understand is that our market doesn't instantly respond to good fundamental news, especially when companies are releasing the results. Then normally what happens is, there'll be a late reaction much later into the quarter. And as you can see, Safaricom is a good example. It's one company that has very good, strong fundamentals in terms of its products and services, in terms of response to its customer care base, in terms of, currently they're implementing the 4G product, while other telecommunications companies like Zain and Orange are still lagging behind. We're looking at a company that actually, been able to come up with strategic alliances and partnership with the financial institutions to be able to fuse itself seriously into the economy. So what I know is before what we've seen on the market as far as Safaricom share is concerned, we're looking at the share price actually heading to the 7 share per shilling, 7 shillings per share in the coming months because of its strong fundamentals. And I think many investors are trying to now appreciate its true value.
Well, Steve, that having been said, with Safaricom though, we always seem to see this nice steady progress on the share price, investors eventually stepping up to the plate, only then to pull back once those levels beyond that initial IPO price is reached. There just seems to be very little drive to give things and keep things going higher, despite all the strong fundamentals you've highlighted, really supportive of this counter. So how sustainable do you see this uptick really being this time round? Or do we still face that situation where investors are easily, inclined to take profits?
I believe the Hercules for Safaricom at the market is the fact that it's very liquid at the moment, and the problem is it has a lot of retail investors, people who own limited number of shares, like 100 shares, 500 shares, compared to the people actually trying to make it up, who are foreign investors who are buying in bulk. So the reason why it normally has drawbacks at the end of the day, after given the fact it has very strong fundamentals, is the fact that the many shares of Safaricom are trying to be consolidated together, and unless this is done, and unless there's a clear path of who are the actual owners of shares at the Safaricom at the market, we'll keep having a pendulum kind of movement for Safaricom. So we'll keep seeing it going up to 5.5, 5.8, back to 4.9, back and forth, until many retailers, especially local investors, are either sold out and come out, and then we're having a few institutions or high net worth individuals investing in Safaricom.
Well, talking about upward climbs, where we've seen the weakening of the shilling in recent weeks, see an improved performance amongst the tea players. What's your outlook for the shilling, where some strength has now come to the fore?
I believe our shilling has been going through a very, difficult time in the last couple of weeks, given the fact that many markets that are connected to the international markets have been suffering from the euro issues. And I think at the end of the day, what the Ministry of Finance tried to do when you are reading out the budget was to look at sealing off the loopholes and strengthening the shilling against the dollar, the pound, and the euro. And I think looking ahead, especially for exports and imports, the shilling should actually gain some ground, become positive, become strong, because there's a lot of positive, and as long as the second phase stimulus package implementation is on course, and then the aspect of liquidity in terms of reserves is actually maintained, as central bank has said, and then basically a clear understanding of the policies and how central bank comes up with monetary policy issues is understood to key stakeholders. I think we're looking at the shilling improving its performance of the market.
Well, I asked that as a prelude to your view on the agri space, because while we've seen this sector run pretty nicely over the past couple of weeks, and while we're still trading at low PEs, a lot of their performance hinges on the performance of that shilling, right?
That's very true. And depending on how the government, the central bank, vis-a-vis, Ministry of Finance will handle the issue, and how will relate, and, trying to understand how the euro is actually faring on, many companies that are listed on the market that actually peg their performance on the shilling are going, the gains and returns are going to be based virtually on the aspect of interest rate and how the shilling performs. So
that having been said, would you be playing in the agricultural space right now? And if so, what would be a stock pick for you within that sector?
I believe if I was to buy some stocks in the agriculture sector, I think I'd go for Sasini at the moment, because one of its diversified portfolio. At the end of the day, if they make losses on the on the agricultural products per se, I think they'll have some revenue coming in on the diversified portfolio in terms of hospitality industry. And I think depending on how much money I'll have, I think agriculture sector right now will be a no-go zone. I'll hold back and be able to understand the clear fundamentals, be able to understand how the shilling is performing, be able to understand how the exact woes why the euro is actually making other currencies around the world plummet, and how they've been going, before I can actually put my money in.
Well, let's leave it there. Thanks so much, Steve Biko, for joining us this morning. Of course, Steve is of the Hidalgo group of companies and joins us live from our studios in Nairobi, Kenya.